Good day, traders. This is Rick. And this is going to be the first of a set of videos we're going to have to help you better navigate the call room. This first video is going to be on trade entry. This is going to help you on how I'm going to call a trade most times, how you're going to get into a trade, um, how you're going to place the order, setting your initial stops and targets. And in future videos, we'll go through different management options. We'll go through our default management option, and we'll go through different options that you can have based on how many contracts you're trading. So the first one trade is going to be an S play. The S play is always going to be a long trade. Okay, so if I call an S play, you'll know that it's going to be a long trade. What's going to happen is we're going to start talking about the trade, and I'm using a market replay here to show you how we would get into this trade. I'm going to run this thing here, and we'll speed it up a little bit if we have to. So what's going to happen is I'll start saying, all right, guys, we may have an S play here. Price is probably going to be around 81, 80, 50, 81. We have to wait for a candle to close 99.9% of the time, unless I call an audible, okay? Because sometimes the markets change and sometimes they're dynamic. So sometimes on an S play, an RS play, or a ZL, we will get in the middle of the candle, and I'll give you instructions on how to do that. But most of the time, we're going to try to wait for a candle to close. So what I'm going to say is, all right, if the market closes between 80, 50, and 81, or if the market closes above 80 at 81 within a tick or so, go ahead. We're going to get long after that candle. Okay, so what we're going to do is we're going to wait. Now, if I know that's going to happen, I'm just going to give you an example on the chart. What I'll do is I'll go ahead and set my ATM strategy. I'm using NinjaTrader, but whatever brokerage or whatever platform you're using, you can use any strategies you want to get in. You're going to use a limit order. And the important thing is on these things is to get into the trade. So let's say I say, all right, guys, if the market closes at 21.81, we're going to look to get long. Well, if you have to take it at 21.25 because it just goes too fast, well, you just take it at 21.25. Okay, one tick is not going to make a difference, but you want to try to get filled at 20 at the price that I give within a tick. Okay, you can also take it a tick better than what I call if you get filled if the opportunity is there. Okay, so basically what's going to happen is I'm going to say, all right, we have 53 seconds left in this candle. If we close 21.81, we're going to look to get long 21.81, 21.81.25, and we'll see if we can take the market up. So if we're looking the candle for this candle to close, obviously would have to be a red candle to close down here. And we're going to let that happen. We have 1 minute and 44 seconds left. I'll speed this up here, and then I'm going to go put it to regular speed. Okay, so the candle's just closed. Okay, the candle's just closed, and we're going to go, and I'm going to say, okay, the candle closed. I'm going to say, let's go ahead and get long. You put your limit order there to get long at 21.81. Okay, now if it looks like you're not going to get filled there, again, it's okay to take it a tick worse. Okay, now what you're going to see is as soon as this gets filled, we'll wait for the candle to close. Now you're going to get filled. Now I have my ATM to take immediately to set my profit 2 points below where we got in. Okay. If you're taking it a tick worse, it actually should be 2 points from the 21.81, but it really shouldn't matter in most cases. I'll let you know where your stop should be and you can adjust it. Now what's going to happen is we're going to want to get ourselves into a risk-free trade. Okay. After we get our first target, I've got this set to 4 ticks. I've got it set to 8 ticks. And then I have my third target set up here at 19 ticks. We won't be in the trade that long because this is going to go into management. But this is going to tell you how you're going to do it. If you had 2 contracts, then it would just be target 1, target 2, and you'd still have your stop at the normal stop, at the normal place. So that's how you enter the trade. Now, in another video, I'm going to go into management and things like that, how to manage the trades after our first profit target and everything like that based on how many contracts you have. And again, we'll go into that in a later video, but that would be how you would get it. We wait for the candle to close. I'm going to call a price, 81, 81.25. You put a limit in and if you a limit in and you get filled anywhere in there within a tick or two, it should be fine. And then we're going to go ahead and we're going to manage this trade. Now you'll see that this trade is going to go up. Now, if this trade comes down to 79.25, or whatever price I give you, it's 2 points from the entry. Okay, so if I say 81, okay, and you get it at 81.25, you want to have your stop down at 79 because the price was 81. You're essentially going to take it a tick worse, and you're going to trade with a one tick more stop. If you want to just trade with the 2-point stop, that's fine as well. Again, 9 times out of 10, a tick's not going to matter getting filled, and a tick's not going to matter in our stop, because very rarely do we take 7 ticks of heat and then it still goes our way. I mean, usually our entries are pretty exact. Okay. So just to speed this thing up, we'll speed it up a little bit. You'll see that the first target will get hit. Okay. Once the first target's hit there, okay, we have 2 contracts left. Now I have this ATM set to do this, to split it, but you're going to go ahead and just move your targets up there, and you're going to get yourself into a risk-free trade um, after your first target's hit. So if you have 3 contracts, okay, then what you're going to do is you're going to take you're going to probably take 2 contracts off, okay, to make sure that you're in a risk-free trade, or you would go to entry on the trade. 3 contracts is kind of an odd number, so if you're trading 3, you probably want to take 1 off or 2 off at a point to be risk-free, or there's different ways you can manage that. And again, I'm going to go through that all in the next videos. But the bottom line is you want to dramatically reduce your risk or be risk-free, depending on how many contracts you have. So essentially, what's happening here is I've got 3 contracts and I've still got a little bit of risk at this point. Okay, so I'm willing to take that risk and see what happens here. So I take $50 on 1 contract. I move my stop down in this scenario. I move it up now once we're filled to -1 point from the entry. And now worst that can happen, if this thing slams down and takes me out, I'm going to lose $100 here. Okay, but I made 50, so I'm basically going to lose $50. Okay, that's with 3 contracts because it's an odd lot. If you had 2 contracts on, then you would take 1 off at a point, you'd go -1, and you'd be in a risk-free trade, and then you would hold for either the second target or until what we call a material change in the marketplace. Okay, and that's how you would get into this trade. Now, for an RS trade is always going to be a short, okay? Always going to be a short. So if I say, all right, guys, we may have a trade coming up, or it's going to be an RS, okay? This is a trade where, again, we enter on a limit order. We have our stop set. If our stop gets hit, it's a losing trade. And the ES, it's going to be 2 points from our entry, okay? 2 points from our entry. On crude oil and the gold, it's a little bit different. On crude oil, it's 20 ticks. Okay, from our entry. And again, I'm going to go over this in another video as far as what the targets are and everything like that on the different instruments. ES, we're going to typically have a 2-point stop on the S, RS, and the ZL. Okay, and on the crude and the gold, we're going to have a 20-tick stop. Okay, so we have a trade coming up here, guys. We're going to have an RS trade. Okay, don't know what the price is going to be yet because I have to see what happens in the marketplace. Okay, but if we can get the right setup, we'll look for an RS. Okay, so what we're going to do is now we're going to wait for the candle to close. Okay, we're going to wait for this candle to close here. This next candle, 1 minute and 19 seconds left. And we're going to see where the market's at. Okay, so we may have an RS here. It's probably going to be around 2084, 2084.50. We have to see where the candle's going to close. Okay, we have to wait for the candle to close. I'm going to give you instructions on this. Okay, so I'm going to say, all right, guys, 18 seconds. Let's see what happens. Okay. If the candle closes between 2084 and 2084.50, we're going to look to get short, but we must wait for the candle to close. So I'm going to have my sell up here limit because I trade on the chart. The candle now closes 2084. I'm going to look to get short on a limit order. Once I get filled, 2084, I've got my stop set 2 points above, and again, in crude and gold, it would be 20 ticks. Okay, I've got my target set, my first target, my second target, and my third target, and that's how you're going to get into the trade. Again, I'll go over management of the trade in another video based on 2 contracts, 3 contracts, and different things. So basically what happens is if this comes up to 2086, we're stopped out. Okay, I'll give you that number. Okay, but it's always going to be 8 ticks. And then what we'll do is we'll get risk-free after a point here. So we'll let this thing come down, fill us at a point. Once you get filled at a point, you're going to move your stop down a point to -1 point from the entry, because we just took $100 on 2 contracts. We can give back 50 now. Okay, if this thing flies up, but we're in what we call a risk-free trade. Why is it risk-free? Because we can't lose on the trade. There's different variations of risk-free depending on how many contracts somebody would have. Okay, if this comes up to 2085, we're going to get stopped out. If it doesn't come up to 2085, we're going to keep going, and we're going to wait for what we call a material change in the market or a second contract to be filled, and we just got taken out of the trade here at our profit, and that's the end of it. Okay, and that is the RS trade. Now the third setup that we have that's similar in the way you enter is called the ZL. ZL, most 99.9% of the time, again, unless I call an audible or make a change, sometimes we have to change our targets. Okay, sometimes we try to get a point on our first target in ES, and sometimes we have to modify that depending on what happens. But this would be the default. Okay, we're going to enter on a limit. Okay, we're going to enter on a limit order. Okay, we're going to wait for a candle to close. Okay, so what I'm going to say here is, all right, guys, if this candle closes at 2087, between 2087 and 2087 quarter, we're going to go ahead and we're going to try to get short. This is going to be a ZL trade. So again, what I do is I'm going to put my sell limit up here. Now you can do this on a dome and you can wait for confirmation, whatever you want to do at this price. I just like to use the chart because it's a little bit easier for me. We'll have this candle close here. We'll wait for the candle to close. And now the candle's closed, so I'll say, all right, guys, go ahead and get short. 2086.50, 2086 quarter. Within a tick, it should be fine. Again, you'll see my 2-point stop is there. If this thing gets up to 88.50, the trade's done and we have a full stop out. Sometimes what I'll do, if the trade's not following through, let's say it comes down here, 3 ticks, doesn't fill us, bounces around, sometimes I'll just say get out of the trade. Okay, so we don't have to take a full stop. Usually that means I believe it's going to go the other direction, and I don't want to take a full stop out when we can just lose a tick or two. Okay, so on a ZL, this is a short. Now a ZL, okay, unlike the S and the RS, and again, an S is always a long. Okay, an RS is always a short. I'm going to write that down. A ZL can be a long or a short. Okay, so you have to listen. I'm going to say, all right, guys, get short 2086.50 when this candle closes, and we'll see if they can take the market down. Okay, and I'll give a bunch of other commentary in there as well. But what I mean is, you're going to get short. If I start saying take the market down, obviously that means I'm looking for it to come down. It's a short. If I say we can take the market up, I'll give you verbal cues like that. Okay, now you're in the trade. This is either going to be a winner, and again, we'll go over management in another video. Okay, or it's going to be a loser, and it's going to come up and stop us out. And that's how you would enter these 3 trades. That will be all for this video, and we'll address additional trades such as the power play and the understanding trade in our next video.